All right, everyone, welcome back to another trade breakdown. We're going to break down a US30 pullback position from the 11th of June. So this one still testing and tweaking. This is the first position I've taken on index or an indice, so US30. Still trying to find what works and the optimal entry and management for these, but really happy with how this one played out. You can see here it was posted on June 11th in Rise, so 1.5 R, which was nice and tight. I had to close this one early due to catching a flight, but it did manage to hit the original target of the 1 hour 50 MA for just over 2%. So managed it quite aggressively just due to timing. But yeah, we'll go ahead and break this one down. So as you know, ideally when we're looking at these daily plays, what we're looking for is, I'll just pull this one forward a bit so we can see it correctly. There we go. So we are playing this bearish engulfing candle off the daily here, and we're looking for something like we saw on the Monday, where we've got a bearish engulfing, we get a pullback, a rejection, and we continue that trend lower. So pullback, rejection, continue lower, and we're looking for the exact same thing here: pullback, rejection, and continue that trend lower. So what we were looking for on this day was exactly that. You can see here on the 1 hour, what I want to see is price pull back, ideally rejecting 0.382 on the 1 hour 50 MA, and then continuing that daily bearish trend to the downside. Now, we don't always get that. Sometimes price will continue to rocket down, or we wait for the pullback. The rejection isn't exactly textbook, and then we miss that continuation play. So these pullbacks are really about maximizing the opportunity from down here and playing that intraday pullback to this value area where we can then look to get short. So that's exactly what I was looking for here on US30. I wanted this to pull back, reject, and ideally follow that daily trend to the downside. Now, how I got into this position was a combination of a few things. So this one teed up a little bit earlier than usual, but what we saw and what I really like to see is this previous daily low get taken before we start the pullback. That's something I really like to see. So we had this little push down initially at market open. So the first couple of hours pushing down, we actually tagged the daily 50 MA, which is another piece of confluence to the upside. So we've got a push down, taken the previous daily low. We've rejected the daily 50 EMA, and then we've got this 1 hour bullish engulfing candle closing here. So once I saw these, this first few hours of price action, that's when I really got interested and was looking to execute on this. As soon as I saw momentum coming in, this is around the 9 a.m. candle close or just prior to it, that is when I executed a live entry. So the other thing here is, if you waited for this push off, you would have really hurt the risk reward by, sort of dragging this up here. You would have been looking at capping yourself extremely tight. So I chose to get in on those last 5 minutes prior to that 4 hour candle closing. So we had a really nice 4 hour candle here, nice little doji with a low test candle, rejecting that daily 50 EMA. And then we had the 1 hour bullish engulfing as well. So really nice intraday price action starting to form there, went live here. And then ideally we'd be targeting, 2-to-1 around this 0.382 fib level here. I have tried to target that in the past and just found that I missed a lot of entries where price has continued to push through to that 1 hour 50 MA or maybe 0.5 on the fib. And due to just not getting the right risk reward, I've not taken a lot of positions that have played out. So for this position on this particular day, I was targeting that 1 hour 50 MA around 0.618. And you can see it gave us the minimum 2-to-1. And just being an index, you're looking for a bit of a wider stop. So ideally, as a minimum, we want to be right below those lows there, which means you're going to have a bit of a wider stop compared to something like a US dollar denominated pair on a Forex pair, or something more widely traded. So that little bit of extra stop protection is going to cap you as well. But you can see here I've had to manually close due to getting a flight that afternoon. I was taking off around 4 p.m. So manually closed pretty much right there for 1.59. And you can see here, what time was this? This is around 10 p.m. my local time. It's gone and hit that target for 2%. So this would have played out, the thesis played out. I mean, this would have been an absolute banger of a position if you held it all the way up here. I just don't think that's realistic given, the intraday price action we're trying to trade. You're trailing these lows quite aggressively. And I mean, really, you probably would have been taken out here for roughly the same as what I manually closed for. But if you were able to hold on to this, I mean, yeah, that's a great position. You're looking at, back to these daily highs here. What's that? 5.8%. So is that realistic? Probably not. I'm really happy with how this one was managed on the day. And yeah, just trying to get more comfortable with these pullback entries, playing that shorter intraday time frame back to here. And you can see this almost shaped up. I mean, you could have potentially gone live here, you would have been taken out for a loss, but this is definitely something I was looking at. This 1 hour candle, if we close with the body below these previous 1 hours, I mean, I would have been very interested in that, or this 1 hour candle here, pushing up, rejecting the 1 hour 50 EMA and 0.382. This is generally where I would go live. So that was very, very close to being a double up. So we would have caught the pullback and then ideally caught the short side. Still haven't caught one of these yet. It's been a bit elusive, but we'll get there one day. So let me know what your thoughts are.